Well, good evening, guys. It is 6:15 p.m. on Thursday, May 16th. This is Futures Brizio. Hope everybody had a great day. And again, just coming in here, just make sure you smash that like button, subscribe to the channel if you like the content, so you get notified whenever I post new content, which I try to do at least a few days a week. As I always say, I'm not selling anything on this channel, so I'm trading and looking at the markets and studying and doing other things, so I'm not always focused on building the channel up and to get lots and lots of views and subscribers, but I would like to do that as well if I can. So I'm trying to be more consistent with it, but I know I fall short on that sometimes. But anyways, I did record this video about 2 hours ago, and my microphone was not sourced right in my software here, so it didn't record any sound. Isn't that lovely? So I'm going to try to duplicate this video as best I can from what I did earlier. So let's get right into it. And basically, guys, the object of this is just to talk about my pre-market setup and bias and how I kind of determine what I'm looking for on the day in the particular assets I trade here. Now, I'm not saying that top-down time frame analysis is important. I know a lot of people preach that. You go out to the higher time frame and work your way down, and I'm not necessarily against that. In futures, depending what your time frame is to hold a trade, I don't think it's as important to go out to, say, a 4-hour or certainly a daily chart, because unlike, say, Forex or stocks, since futures work on time contracts, if you're just starting on let's say you're just starting to look at like a September contract, well, that's probably just started trading recently. So if you go to a 4-hour or a daily chart, you're not going to see a lot of price action because it's just started trading and it'll be very choppy. So you really can't do that. And I think, depending how long you like to hold your trades to kind of dictate what time frame you're using to do your analysis on. Okay, so for me, with futures, I like to, day trade and or scalp. I generally 90% of the time do not hold my trades past that session. Occasionally I do, but most of the time I don't. And so for me, my higher time frame for my daily bias is going to be around the 30-minute to 1-hour chart, with an entry down on the shorter time frame just to fine tune an entry, say on the 1-minute to 5-minute, depending on how good of an entry I can get based on when I start my analysis and what the market's doing at the time. Okay, so you may or may not agree with that, but again, I think the key is how long do you plan on holding your trades for? What is your time horizon? And the longer that horizon is, the higher up the time frame scale you need to go. Okay, but again, for me, 30-minute chart I think gives enough detail, but not too much. Like if you go to a shorter time frame for analysis, but it gives enough. And I think it's a good happy medium between, say, the 20-minute and the 1-hour time frame in order to get my directional bias. Okay. Now, for some of these markets, it also depends which one you're trading, depending what time I start looking at them. For things like the S&P and the NASDAQ, so the North American session starts at 9:30 a.m. New York time. I don't generally start really focusing on those too much. I may take a look at them before that, but in terms of looking for any entries, it's generally after that. The only time I might consider it earlier is if there's 8:30 news. Sometimes, a lot of times, major economic news in the U.S. comes out at 8:30, which is an hour before the open. And so on those days, it might be worth looking. But on general non-news days, morning news days, then I generally, S&P and NASDAQ, I'll start looking for trades after 9:30. But gold, natural gas, and now copper I'm looking at a little bit. I will begin to look at those, say, 7 or 8 a.m. because they can actually begin moving pretty early. And I've also noticed, especially with gas and copper especially, is that by about noontime or so, maybe even earlier, maybe some days 11, 11:30, 12 noon, somewhere around, let's just call it noon, the market tends to really start to dry up. Volume really dries up and drops down. And, I think for things like copper, that's probably because, of course, there are speculators and retail traders in copper. Obviously, there's liquidity in the market for that. But I think a lot of what moves that market, since copper is like an industrial metal, right? It's used to make things. So I think a lot of the people or, entities in their trading copper are probably like your producers, your suppliers, the end users that, need to, hedge and get better pricing for their, for production purposes. And so I think that's probably why you see, copper kind of come into the market early, and then you see volume kind of dry up after that. And natural gas probably to a slightly lesser extent, where I've seen that kind of go later in the day. But even for that, if you look at your charts on a short time frame and just kind of look maybe like a 10-minute chart, 5-minute chart, and just look at each day, and you'll definitely see a pattern of volume ramping up into the early New York session and then dropping off pretty rapidly if you just put a volume indicator on your chart. And notice the price action on most days will start going sideways for the most part, maybe counter trend as the trend traders close out for the day. That's not the case every day because there could be some economic news that causes something to keep moving. For the most part, that's what you're going to find. Whereas I think like S&P and NASDAQ is more suited to the retail market, so those can move really all day depending on what the fundamentals and the news is in the market. So, but again, a lot of these industrial commodities and energy markets tend to have like a flash in the pan for maybe 3-4 hours, and then it starts to die down. So I think you need to keep that in mind, especially when you're choosing which markets to trade and how long you're going to hold the trades and what time you can be looking at the charts. All right, so anyways, enough of that. Let's just jump right into it. So this is gold. So again, with gold, I think it tends to go a little bit, a little bit later in the day. But if you look at gold, it tends to start a little bit earlier. So let's say 11 on my broker, 11 or 12 o'clock, which is 7 or 8 in the morning. So if I mark that off, we'll just look at today. So, you can see coming into that, we were definitely heading down. We had the Heiken Ashi Smooth, pointing downwards. I think that this is definitely, heading down for the day. Sorry, guys. Just give me one sec. Okay, so so anyway, so you can see going down, and these are the Heiken Ashi Smooth candles. And again, guys, you can use Heiken Ashi, you can use Heiken Ashi Smooth, line charts, regular candles, bar charts, whatever you want. I've been really liking using the line chart, and I throw the Heiken Ashi Smooth on there to help. But I have a template with both of them and just the line chart. And I'll go back and forth depending, what I'm looking for. So anyways, let's say you come to the charts around this point. You can see things have been heading down. Then I'll drop to a 5-minute chart, say, okay, where's a good place to enter? And of course, you can see right where I dropped this line, this actually would have been a great place to enter anywhere in here. And we had this move down, and you can see again later in the session, this is around 11 o'clock, a little after 11, the market kind of reversed and ended this downtrend that was going on all day. So again, this is what I'm saying. And again, it's not that you can't trade this in the afternoon. You can see it had a little push up, and then it just kind of chopped around and started going down again. But the most of the move down for the entire session was definitely in a downtrend, as you can see. So that's kind of that with gold. If we go over to copper, again, this line is set at around 7:30 in the morning. You can see coming into the session clearly in a downtrend, line chart making lower highs, lower lows, bearish Heiken Ashi Smooth candles. Okay, and you can see overall in a downtrend. So 5-minute chart, you can see just before that there was a great entry right here. Price pulled back. This was a great entry. As soon as we kind of have some structure break, Heiken Ashi candles start pointing down again. We get these flat-topped bearish Heiken Ashi candles where the top of them on a downtrend, where there's no wicks at the top. That's usually indicates pretty strong price action. Okay, and of course bullish ones are the opposite, where there's flat bottoms, but bearish ones are flat tops. There's going to be wicks on all these. That has nothing to do with like the wick that like you see on a regular candlestick. It's just the way Heiken Ashis are calculated. And you can see again, this went all the way down, kept going, and then we bottomed out again here around, this was actually pretty early, around 10:30 in the morning. So again, we have a few hours in here to trade this, and then the price just kind of meandered up the rest of the day, didn't really do a heck of a lot, okay? So again, if you miss this entry here on the 5 minute, you're like, oh, well, it's already kind of moving. You could jump to a 1 minute, okay, and try to look for an entry here. And you can see there's several more places you could have entered on the way down here on the 1 minute. Obviously, understanding that the lower you go here and the later it gets, the less, reward you might get here. So you want to obviously get in on these as soon as possible. But on the 1 minute time frame, you can see these pullbacks on the Heiken Ashi, even like this little one here, and then the last push down basically right here. Okay, so that's copper, and again runs out pretty early. And then here on natural gas, again 30-minute chart. Again, going into the session, you can see this is around 8 o'clock in the morning. You see we were coming out of a down, an overnight kind of retracement, still in an uptrend overall here, putting in higher lows, higher highs. And then we had this overnight kind of drift lower coming into the session early on. We had, again, these flat bottom bullish Heiken Ashi and the line chart pointing up after this downtrend kind of broke higher right here. So you can definitely, at least look at a bullish bias early on. You can go to the 5 minute chart. There actually was an entry right here. But again, if you miss it, you can drop to a 1 minute. Okay, and you can just kind of look for some pullback entries wherever you see these bearish Heiken Ashi. These are your good places to get in. And, I was talking about volume before, and you can see, this is early on. You can see volume starts to build. We start to get some peaks here, drops off, and then there's this big peak at the New York Open, North American Open. But then pretty rapidly after that, price begins to drop off, or the volume drops off. And other than a little blip here, it just really bottoms out and flattens out. And that's indicative of the price action here later in the session, just basically going nowhere, just chopping up and down. And so this really is, to me, is not tradable. It's just, there's no volatility here. So again, you don't have, a heck of a lot of time to trade these especially these energy and metals commodities. That's just by the nature of how these work. So you have to keep that in mind. And then, again, with things like the NASDAQ and the ES, these can definitely go a little bit later. So here's the North American Open, I believe. Let me just check. Yeah, so this is the North American Open. See, again, coming out of the overnight consolidation down after a big run up the day before or a couple of days before. And then, so you can also see these Heiken Ashi candles. When you do get wicks on both sides and small bodies, again, they're kind of doji candles suggesting consolidation, low volatility heading into the open. And then you can see we immediately start getting blue candles heading up. Now you can see the line chart did shoot up to a new high, but take a note of the Heiken Ashi candles because this is still the 30-minute chart. You can see it painted these few Heiken Ashi bullish candles, but you can see there's wicks at the bottom here. So there's no real strong price action here. That this, on a bullish move up, if there's wicks underneath, that definitely suggests weakening or not really super strong price action, especially if this persists for more than one or two candles. And that's exactly what happened here. Price begin to angle down after that. And then, on the shorter time frame, we begin to, to break structure here. Okay, and so, and let me go back to the 30. Like, as opposed to this, where you see all these flat bottom Heiken Ashi candles going up. But you can see as it starts to get up, it starts to roll over. The candles get smaller and smaller and smaller. And you start to develop wicks here. And then, on this, if I was in this long, as soon as I start to see, this type of thing where the candles get tiny, 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 and then they turn red or bearish, I'd be out of that trade. Okay, so again, going into the North American session, we see this push up right here. Okay, but there's not a lot of bullish price action looking at the Heiken Ashi candles. And then so we'll zoom back out a tad bit, go down to the 5. And then, again, here's where price topped out, okay, and then we had retracement, tried to run up again right here, failed to make a new high. We start forming bearish Heiken Ashi candles, and then, you know, underneath this low that it formed right here would be a great place to start looking for shorts. A relatively low risk trade. You know, as soon as it breaks up through this structure here, you could go short, and then it pulls back right into that zone perfectly, and then goes the rest of the day down. And if you went short anywhere in here, you could put your stop loss back above even this swing right here, and it's a pretty low risk trade. And you know, you have to just accept the risk that it's going to go down. If it turns against you and goes back up, oh well, you get stopped out. So, you know, risk management. And so, you know, you can see exactly what it did the rest of the day, and right into the close here, you know, it ended up going down. We're now trading into the overnight session now. So, and the NQ, not going to beat a dead horse, is a carbon copy of the ES. Actually, yeah, this is the NQ. I showed you the ES. It's a carbon copy, so I'm not going to beat that dead horse. Exactly the same setup that we see on the ES. So, guys, that's really about it. Like I said, you know, think about what your time horizon is. Think about the asset that you're trading. Again, if you're doing things like the ES and the NQ, you know, kind of more that retail session-friendly markets, things like the ES and the NQ, you can definitely, you know, look for setups if there's going to be any trending. You could look for setups really right through the day, I think. Volume will begin to dry up, but you can still get some moves in the afternoon, as you can see here. But for things like, you know, your commodities, your energy markets, you know, even a lot of your food commodities and metals, you're going to find that there's an early push during the first half of the day, and then things tend to quiet down after that. And so you have to just keep that in mind when you're considering your time horizon for how long you want to be in these trades. So, all right. So this is a little bit shorter than the first one. I don't know if I talked faster. The other one I went like 25, 28 minutes. But I kind of wound this up a little bit quicker, I guess, because I was more focused and knew what I was going to say from the first one. But again, guys, you know, these Heiken Ashi Smooth candles is just an option. I like them just to help me, you know, cheat a little bit on the trend and help, you know, give me a little bit more confidence to stay in when you see these like pullbacks on the line chart. You know, with these flat bottom Heiken Ashi candles saying, hey, the price action's still really strong, no reason to get out. But then I start to see these warning signs when we get near the top with these dojis and wicks on both sides, and then price rolling over and potentially changing direction. Is a good place to either manage a trade or take profits if you're in one profitable, or like I said, at least manage your stop loss, you know, up and lock in some profits. So, but you don't have to use that. Again, use regular candles, use whatever you want. It's just what works for me. And again, I have templates. I have a template with both of these, and I have a template where I can flip over just to the line chart if I want to just take the Heiken Ashi Smooth off of here. And regarding the Heiken Ashi Smooth, I get this. This is not included in MetaTrader, but it's a free indicator. I get them off the MetaTrader marketplace. If you go to the MQL5 MetaTrader page, you go to Market, and you just type in Heiken Ashi Smooth into the search bar, you will find an MT4 and an MT5 version. Just click the free tab so to filter out the free version, and it's there. It works pretty much the same on both platforms, and there are a couple of paid versions. I don't recommend it. There's really no benefit to the paid version. And you can play around with the settings, but I tend to go right out of the box with it. I found that it works pretty well, which defaults to like a 7-period linear weighted moving average calculation for these, but you can play around with it. But I find that's about the best setting for this. You can change the moving average, because that's essentially what this is plotting, is like a moving average of Heiken Ashi candles. So it's taking kind of the best of a moving average with Heiken Ashi candles and plotting it that way. So, but again, you can play around with the settings, and you don't have to use it at all if you don't want. So anyways, guys, so I will leave it there. Any questions, comments, as always, leave them down below. Smash that like button, subscribe to the channel, and I will talk to you in the next video. And hopefully, like I said, I'm going to try to do a little bit more in terms of pre-market setups, getting in here and showing bias ahead of the market. But it's just tough because by then I'm on the charts, I'm doing my analysis, and to make a video at that point is an extra distraction. But maybe, I'll just do it and just be talking out loud while I look. So if you want to see that, let me know in the comments. And until next time, guys, we'll talk to you soon.